Hey folks, welcome back. Hope you all had a nice August. It's kind of funny. It's a Sunday here in the United States, and the market is closed tomorrow. But what's funny is I logged into my Fidelity account and I got dividends, and it says September the 2nd on it. So it's like I got dividends in advance. I wasn't expecting that. I was like, they're not supposed to be there yet. So always nice to get some extra, dividends, even when the market is closed. I don't know how that works. Maybe one of you out there can explain that to me, how you can get dividends when the market's not open. It's like they send them in advance or something. Well, we are at record high valuations in many regards. Price to book is 5.42. That's higher than the year 2000. The Schiller is up to almost 39 here. In 2000, it was 44. Here's my viewpoint on this, and I could be incorrect. Everybody is saying valuations are high. Some people are scared. But what I'm looking at is I'm not looking for numbers here as far as like an exact number to say, oh, the market's now overvalued. What I'm looking at is rate of increase. And so if you look at like something like 2000 or maybe 2008, what you see is this kind of exponential increase. The exponential is not the right word, but you get my point. It goes up really fast. So what I'm looking for is the rate of acceleration starts to increase really rapidly. And I just don't think we're there yet. I think it's smart to be cautious. I have taken some things off the table, but I don't think that rate is increasing fast enough yet. Not to say that it has to, as the old saying goes, none of us really know much here. So that's me. I'm just looking for that rate of acceleration to really increase. The inflation rate reading was not that great, 2.7%. And then if you take energy out, it was even more. I think right now, things aren't looking that great. I don't know what's going to propel the markets higher. If you haven't been watching this channel, I'm not one of those people that says it's an AI bubble. I think AI is frankly, I think it might be even considered early as far as I think, and I could be wrong about that as well, but that's just how I'm feeling about it. I think that there's going to be a lot of AI uses in the future, and we're not there yet. It's a growing kind of phenomenon. So we'll just have to kind of wait and see. My best performer is Brainsway. This stock, let me just look at the numbers. This thing has been going absolutely bonkers. It's up 30% on 1 month, 63% in 6 months, and a whopping 94% over the year. I have not owned it a year. I've only owned it like 3 months. I'm up 40% in it or something like that. So that's been one of my best performers. But my best performers, like overall, have been tobacco and bank stocks. I don't know how many weeks or even months ago it's been since I guess it's been in July, I made my last video that was telling you about bank stocks and how I felt like they were a good buy. I own Regions, that's up 15% in 6 months and 18% over the last year. Bank 7 is a regional bank that I really like as well. That's up 4.11% over the month, 20% over the 6 months, and 25% over the last year. This bank is looking swell to me because they just had a really gigantic dividend increase. I think it was 12 or 13% dividend increase. It still looks undervalued to me. So I'm still buying some of these bank stocks just every now and then. I'm not buying like I once was because I think they've ran up so fast that right now it's not as good of a buy. I also bought into Barclays. That is up 63% over the last year and 24% over the last 6 months. So these bank stocks have been killing it. Barclays is probably my weakest performer as far as bank stocks. I bought into this because it's international, UK, and so I think I'm up 8%. It pays a decent dividend, something like 2.8%, but I think long term that Barclays is looking really nice too. Tobacco stocks, I own 2 now. I used to only own 1. I used to only own British Tobacco. I've also now bought Imperial Brands. Imperial Brands is up 10% on the month and 20% over the last 6 months. British Tobacco, 9.72% over the last month, 46%. I've owned British Tobacco since 2023. The month escapes me, but I have portions that I'm up 80%, not even counting the dividend. And when I bought in, the dividend was like an 8% yield or something, most of mine. So most of this stock, I'm up like 60 to 80%. I don't know what to do with it, frankly. It's entering that kind of territory because it's went up so much. I feel like at some point I may have to trim some, but it pays such a great dividend. I don't know. Imperial Brands, I've only owned that a few months, and I think I'm up like 6-7%, not counting the dividends. So I have sold some things. I took a little bit of my IWY, my growth ETF, off the table. Not much, just a little bit. I also sold out of Entergy since my last video. I've sold out of all of my gold ETFs, and I feel okay about that. They haven't been doing as well as they once were. What am I adding to? So right now I'm adding to Portland Energy Company. I've owned that a little while. I'm also continuing to add to my mid-cap value ETF, IJJ, in my retirement account. That I still think is way undervalued, but here's the problem is I've been adding to it for a while and it's been undervalued for a while. And of course, not everything has been doing swell. My Costco has kind of been lagging. I haven't bought into that in, I don't know, since January of this year. Eastman Chemicals was probably my worst buy because after the earnings report, it went down 20%. But it's been having a good month. It's went up like 4% in the last month. I don't remember how much I'm down, like 12% or something. But I've bought a little more of this. I'm a little cautious. I don't want to rush in on this until there's some upward momentum. Uber, which is one of my long-term stocks. I've owned it since the pandemic, 2020. I'm up over 100% in this stock. It's had a good month, 7.65% on the month and 23% over the last 6 months. So Uber's doing good, 55% over the last year versus 15% for the S&P 500. So that's kind of where my main stocks are. I have more stocks in my portfolio. Maybe I'll get around to sharing my entire portfolio. I've trimmed some things down, sold some things, sold out of my Cigna Energy. I don't really want to buy new positions right now. I'm being cautious right now, honestly. I'm not adding any new money into any of my accounts until I get closer to the end of the year. Maybe I'll add to my IRA and my solo 401k as write-offs. But right now I'm just kind of staying put. We're kind of at a standstill, kind of strange point here in the US. We have a lot of uncertainty, tariffs, this last inflation reading, high valuations, but I'm going to stay put and stay invested until something bad happens because I think, where else am I going to run to? Treasury bills are falling. My bank actually is not paying too bad on the savings right now. I'm still getting over 4% in my bank checking account right now. But CDs have fallen, T-bills have fallen. I don't think precious metals are all that great of a bet at this point. I am still in palladium, but that's a very, very long-term play, not short-term. But I don't think there's really anywhere to run is the problem. And I think until I see like some great acceleration in the valuations, once again, not numbers, but acceleration, then I will be fearful. But until then, I'm just going to kind of stay put and watch it kind of like a hawk. Well, I hope you all have a wonderful September and take care.